Hey y'all, what's up? It's your boy E White. All right, so I'm back. Hadn't done a video in a while, but I'm back doing one with these client sentiment. And basically, what we're doing with sentiment, if you're not familiar with it, we're basically gauging where retail traders uh, are basically have a feeling of where market will go, or they actually have open orders that market makers are seeing what we call liquidity in the market. All right, so we're looking at Australian US dollar. 72% are long, 28% are short. Already we're looking for short setups. Now, we're going to be doing every chart based off the daily, or I may go down to the 4 hour time frame. But if you notice, we're on a daily chart right now on here, and you clearly can see that we're what? In a downtrend. All right, now we're in a little bit of some relief rally. We found some support down here, and we're bouncing off of it for the most part, right? So what is this? 1, 2. So this last 2 days we have a little bit of a bounce, but if you notice here, we've been in a continuous downtrend for basically about 13, 15 to 16 days. So it started on basically December the 28th, and we've been in a downtrend since. All right, starting from this point. Okay. Now, whenever you're doing your sentiment trading, you want to be able to notate on the chart. All right. And so I'm going to notate on the chart so you guys can see how we can keep up with it. Okay. All right. So I added on the chart. I got 72% long, 28% short, and I got the date as of today. Okay. The reason why we want to do this is because over time, you want to continue to go back and you want to check. It's because why? Let's say by next Monday, the 72% is starting to change. So if the 72% start to change, that means that we may start seeing a shift of where price may be doing some type of reversal. Okay. Now, because I wasn't doing this mapping on the previous week, I may could have seen that, hey, maybe this wasn't 72, maybe this was 60 something percent. All right. If that's starting to decrease, maybe we want to start looking to get ready for a potential bounce or a pivot in the market. So we probably could have seen that's happening right here. Now, granted, we are back in what? We're back in the area of demand. This was a demand zone. Why? It's because we had what? We had price from here to from the top candle to the bottom candle. We had price to basically blast out of this zone. All right, we got back up here, which was a previous supply zone. Okay, this whole entire area is a supply zone that we get back into. So now we're back in the demand zone, and since we're back in the demand zone, we should be careful. We shouldn't be looking for some shorting opportunity right now. If anything, we've missed all this move down. This is a lot of pips that could have been made. So we're talking all the way to the bottom. We're talking about 350 pips that could have been made based off of that. But so what I'm saying is, this is if I'm still looking for shorts right now. This is not an area that I'm looking to get in anything. What I want to see is I want to see this area violated. Okay. Now, if I want to, I really want to see if I see this violated. I want to see prices. I want to see candles close below this level. All right. And if I can get that, then I will start looking for these next area down here. Okay. This will be the next area I'll look to take this trade to. Okay. Now, with that being said, too, we can also pull up our Fibonacci retracement tool and see where we currently are in retracement. All right. We know that the 61% is probably the next level that we will reach to. So if somebody did want to try to see if they can get in and get a short in from this area, That's decent. You got 80 pip move, which you possibly could get to. Um, but like I said, I like this particular area of where I think we can get to, which will be a previous demand zone as well too. The price broke out of, which means that we may have some liquidity down here that still needs to be picked back up. Okay, uh, let's go on. Let's look at the next one. All right, we're gonna look at USD JPY. 27% are long and 73% are short. We already know that what we're looking for a price probably going up, which will be bullish, and that's exactly what we got. All right, so this started from December 28th as well. And from this point all the way up to this point where we currently are now, we're talking about an 809 pip move, which is very good. And so you're starting to see the pattern, right? All right. So once again, you're going to probably need to put the what? Put the date, because now we're coming. We don't know how long this trend is going to remain. We need to start seeing some things, but because people are still heavily uh, shorting this, 73% still want to short this stuff. What's happening is that, think about it. People are now looking at this as a key area where price had already dropped from. Okay. So this supply area. So you got people also looking at this area too. Why? Because this is supply area. And that's why sometimes supply and demand zones can get people in trouble, because you got various areas on the chart where there's a whole lot of supply and demand zones. Okay. So this is an area where people look to the left and they say, hey, price dropped from here. So we're going to open up a whole bunch of shorts. Well, the problem is it's 73% of y'all that are doing that. The market is not going to pay you. So instead of like, thank you, since you want to sell, we're going to buy, because now we have the liquidity and we're going to push the price up, and we're going to wipe all you guys out with liquidity, because your stop loss is going to buy. And guess what? When you close out on your stop loss, it becomes a buy order. So you just add. So it's like a short squeeze, right? You're buying, you're adding more to it. So that's all you see as it goes up. A lot of people were shorting, but then they had to come back in and had to buy at a higher price to close out. Simple as that, guys. So that's how it works. So if we keep that in mind, you start understanding how this game is being played. Okay. Now we also can bring up what, once again, the fibs, drag it down, and then we can look. And we'll see, of course, we hit all the major levels to 70%. If anything, the next level we're looking to hit is that 78% level. And from where we currently are now, it's almost another 100 something pips to get there. So in this situation, what we're looking for is what? Buy sells. We're looking for longs. We're still looking for longs. We're looking for an event to get us long. All right, so we can look. We're above all the moving averages, which is good, which means we're still bullish for the most part. And like I said, we're looking for bullish setups. Now, of course, we'll go down to lower time frames, find the right proper setup before getting in. We're on a daily chart, so we don't make entries based off of the daily. We go down to a lower time frame, between the 15 minute, maybe 30. Um, some people will do the hour or 4 hour, but we look for those entries on those lower time frames. Now you can use an indicator if you want to use. I got one called the MSB OB. It's an order block, so it shows supply and demand zones. So of course, this will go ahead and show you that this is an order block area where price probably still want to try to get up into, and that probably lies right into what we talked about, that 78% retracement level. So it's right in there. So the light price really wants to try to force to get back to this area. All right, over here we got the NZD, New Zealand dollar, and the Canadian dollar. All right, currently we got 70% that are long and 30% that are short. All right, guess what we're looking to go with? All right, you should be getting it by now, right? So look what's happening. All right, We got nice 4 days worth of bearish candles being pushed down. Okay, actually five. So we still got a bias of what going short because we got 70% that are still long. So we want to look for short setups. So we'll go on a lower time frame and we'll look for a setup. Okay, we're finding some support here. So what could be a good way to go short is to wait till maybe this level is violated to get in before even looking to go short for the most part, right? And once again, if we go down to a lower time frame, see some of the things that we may be working with. Like I said, this is a key area we really want to look at. This breaking, get below. Of course, some people might want to start playing with some of these levels here as well. But for me, I would like to see price get below this and close below this. So just simple rules that we're following when it comes to this. Now you see now it looks totally different when we was on a higher time frame. We see a lot more going on right here. Right? And so we can measure some of these levels to where we can get potential targets. If we do break below, this will be the next target area that we'll be looking to get to. And it could be pretty substantial. It's decent. So it's about 41 pips to get to that area if we do. So I just used the fib extension tool to get me to that particular area. Let's go back up on a higher time frame to the daily. And then if we get back here on a daily, I can then simply just come in here once again, do a Fibonacci retracement and see where we currently are. And we definitely want to see if we can get to 61%. If we get to that level, that's a pretty good. So we can short get down in here. Now we're talking about a 107 pip move if we can get here. So that's something to keep an eye on that. All right, look at this. Euro, Australian dollar, we got what? 85% are short, 15% are long. Look what price doing. Price is in an uptrend. How many pips? Well, at least the up here is a 547 to 418. So you see what's going on. We don't want to follow what everybody else is doing. We want to do the opposite. This is the contrarian way. It's all about liquidity. Okay, we don't want to pay out all these traders. What is that? 85%. We don't want to put A at 85%. You can't make money like that. Okay, so you can click on. You can see, 84%, 16 start to change a little bit, right? But still, even give you the signal is bullish. You still need to be able to know your supply and demand zones. You need to know how to mark up the chart. Simple as that. So, we got this level. Let me do this. We know on a daily, we found some resistance up at this level. All right. And then now we have this level that we're dealing with. Simple as put, we got 19 hours basically. But we want to see, I really want to see this level just basically violated. I want to see another candle or something violate. And that's like I said, we go down to a lower time frame, the 30 minute, 15, whatever. Look, if we get above and close above, I'm gonna be looking to do what? I'm gonna be looking to go um what is it? Long. All right. So because remember, yeah, 84% short. So I want to get above here. All right. Take the trade, go long. Where your stop loss is gonna go. It's gonna go below right there. All right. So that means you need to take your lot sizes appropriately. Let's just say, all right, so it's about 35 pips from right there. But let's say let's get in, let's say it breaks. So it's 48 pips. So you need to know accordingly. If you're taking a standard lot size, you're basically telling yourself you're willing to lose $483. If you know that's not what you really want to lose, then no, right? So here's some areas that we can get back up to. That's a 75 pip move. Then that's $750, or it depends on the lot size. You may be doing a $1. That's $75. So you'd be risking 48 to make 75. We can live with that. Okay. So you're not going to win every trade. Simple as that, guys. You're not going to win every trade. So you just set your stop loss. 67% short on the British pound, New Zealand dollar, and then 33% along. So what are we looking for? We're looking for short. Well, I mean, sorry, we're looking for long setups. All right, so a lot of people short. They're looking at this. They're like, "Hey, it's short, short." They probably did the same thing here. It's probably a whole lot of people want to go short. It gave a little bit of move to go short, but then it pressed against them. Right. So even right now, I mean, the old way I used to trade, I'm like, man, this is a period of resistance. Man, I'm just going to automatically go short. And this is how they get liquidity. They push against you. It's a lot of people who thought the same here. In fact, a lot of them got caught in. That's like, hey, we're definitely going, we definitely going short. And then look what happened. All your stop losses getting collected. Now, some of you probably got into the profit a little bit on this, but for the most part, you thought it was going to come back down to here. It didn't. It pushed back up. So you gotta understand everything about these markets is just almost like it's a it's a manipulation game. It's to trick people. So you got to master your emotions. You got to understand it. Look, somebody's trying to trick me out of my money. So if you always think like that, then you'll be on guard to not be so a willing participant in the market to just be taken advantage of. As simple as that. Right. So I'm gonna end this video here. Just doing a little get back in the swing of things. So I'll be doing a little bit more videos like this, just going over some of the strategies I'll be using. As simple as that. It's free courses all over the internet. There's a lot of channels out here teaching it, but at the end of the day, it's really about your mindset and you just repeatedly doing the same thing over and over and just having a proper risk management. At the end of the day, anybody could be successful in this, but in order to be successful in this game, you got to have the right mindset and discipline. And everybody just don't have discipline. So it's nobody else's fault. You just gotta look at yourself in the mirror and say, "Hey, am I disciplined?" And if not, then at least just be honest, and we can go from there. Hit the like button, subscribe. It's your boy E White. I'm out.